The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. I know I'm like a lot of listeners. We thank you so much for helping us to earn money in the market, and Mr. O'Brien also, what you all do at TFNN. It is absolutely huge. Appreciate it very much. All the best to you and your family, man. I'm telling you, we so appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Tuesday. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. You can tune in to Breakout Investing 5 days a week now on the TFNN radio network from 3 to 4 Eastern. If you can't listen to the show live, the daily reminder, you can always head over to iTunes and pick up the podcast over there. Feel free to leave a review if you so choose, and don't forget you can listen to all TFNN programming on your smartphone. Just open your smartphone browser, type in tfnn.mobi, and you can get the stream that way as well. I'll be going over charts like I always do on my show. If you want to look at those charts live right along with me, use Tiger TV right on the homepage of tfnn.com. The show is carried live on Channel 1. It is archived on Channel 13, and Tiger TV is also viewable on your handheld device as well. All right, what are these markets doing? Let's check in on the NASDAQ Composite. A little less than 1 hour left to go in Tuesday's session. NASDAQ Composite still sitting near its session low, working on 3 straight declines. NASDAQ fell last Friday, it fell on Monday, and it fell again today. You can see it is now trading below its 50-day moving average. The tech index is down close to 40 points, 1.3%, to 3,072. It was my thought that the NASDAQ would be able to hold on to this 50-day moving average. The fact that it hasn't today doesn't necessarily mean that it's bound to break this 3,000 level. Perhaps even go all the way down to the 200-day moving average, right around 29.50, 29.51. We'll see where the selling takes us. Certainly, the price action in Apple lately has been cause for concern. Apple, after it was working on 4 straight declines today, hit an intraday low of 623.55. Remember in yesterday's show, was typically when a stock breaks out, it's not uncommon during a market pullback to eventually see it revisit a swing point, and that's pretty much what Apple did here. It broke out over $620 a share thereabouts in early August, and today it hit an intraday low of 623. So it came just within a few points of that swing point, and look at what it did. It bounced and is now actually slightly higher, up 7 cents to 638.24. A lot of people saying that Apple is a buy right here. The fact that it came down to that prior swing point around 620 and quickly bounced, I could maybe see that argument. I'm not interested in owning the stock right now, not with the signs of distribution that I'm starting to see in the broad market. And when the indices go into worry wart mode and you see stocks starting to break down, that it's problematic, and there's no reason to, go on offense here and try to make money going long stocks. There may be a trade here in Apple, but now that it's below its 50-day moving average, I wouldn't be surprised to see that 658 level, if it continues to rally, ultimately turn into resistance. So good performance so far today by Apple, but I don't think this stock is out of the woods yet. So Apple weighing on tech stocks, chip stocks as well. The Philadelphia Semiconductor Index is lagging badly. This is really a kind of a technical mess here. The Philadelphia Semiconductor Index right now down 1.4% to 373.91. It also is stuck underneath key resistance or key what were support levels, the 50-day and 200-day moving average. But a lot of negative sentiment around the chip space today. It was earlier today, chip maker Intersil, that's ticker ISIL. Let's check in on that name here. Not a widely known name, but Intersil did lower its third quarter revenue outlook. The chip maker, not surprisingly, cited weakness in the global PC market. That's not a new story. Demand for PCs certainly has suffered in recent months as tablet computers have become increasingly popular, so Intersil has been under selling pressure for quite some time. It's down another 3.3% today to $7.07. Also, I believe it was Intel today. Let's check in on shares of Intel, INTC. No, I had it. Yeah, Intel was downgraded today by Bernstein to underperform, and Nomura Securities reduced its profit estimates on the company through 2013. So Intel weighing on the tech sector as well here, down 2.3% to 2189. Checking in on the S&P 500. See what the benchmark index is up to today. It is also trading near its session low, down a little more than 10 points, 0.7% to 1445. S&P 500 still holding above its 50-day moving average here. And let's also check in on the NYSE Composite. And we'll see that the NYSE Composite broad-based index is also holding above its 50-day moving average. So the story right now is obviously weakness in tech, with the NASDAQ underneath its 50-day moving average, with Apple underneath its 50-day moving average. Clearly the story here is, what are these tech earnings going to look like in third quarter earnings season? We're not going to really start to see the tech earnings for a couple of weeks. I believe, well, no, Google I know comes out October 18th. That's really from that point on, Google is one of the first high-profile tech names to report. So after October 18th, or right around that time, you'll start seeing more and more tech earnings come in here. So clearly there's a lot of concerns here in the market. You have to be nimble in a market environment like this. I had a thesis between now and the end of the year. I thought that, again, the NASDAQ was would be able to hold its 50-day moving average. I thought that leading stocks were going to be holding up fine. They're going to be respecting support levels, and in some cases that has not turned out to be the case. So you have to adapt, and you have to change your thesis. Do I like the market right now? Well, I don't like it nearly as much as I did a couple of weeks ago. There's no doubt about that. I've got some holdings that I thought would find support. They're not. Market's telling me to lighten up. I'm lightening up. So, my ultimate growth stocks model portfolio went from, maybe 60% invested. Now I'm about 40% invested. So, kind of want to mostly look on the sidelines here. I'm sticking with a few names for now. They look vulnerable. It's not clear to me that this market is ready to rally. Remember, headed into today, we had seen 5 higher volume declines for not only the S&P 500, but also the New York Stock Exchange Composite Index. There were 3 such days on the NASDAQ. So that's enough distribution to be concerned here. And, look at the headlines earlier today. The market is clearly worried about worldwide economic growth, clearly worried about third quarter earnings season. Overnight, China took more policy action to support its economy, and they injected another $42 billion into their economy. Remember, stimulus from China used to result in a big pre-market futures and nice gains for the market. Not anymore. This story of stimulus is kind of an old story in the market. Market is looking forward here and really starting to think about the possibility for a weak third quarter earnings season and possibly, economic weakness extending into 2013. So remember on Monday, yesterday, the World Bank cut its growth forecasts for the East Asia and Pacific region. It also cut its growth forecast for China, seeing 7.7% growth in 2012, down from a prior forecast of 8.2%. Again, additional stimulus from China earlier today has not done much to help stocks over here. And earlier today, the International Monetary Fund, the IMF, cut its estimate of 2002 global growth to 3.3% from 3.5%, and 2013 growth to 3.6% from 3.9%. So, nothing alarming there, but still IMF lowering its estimates for global growth. Earnings warnings, we're starting to see them. Just recently, Informatica, INFA, Hewlett-Packard, not having really great things to say about demand. Mentioned Intersil. We also had Owens Corning, OC. This is a name that also warned today. Owens Corning really taking a hit here, down 8.4%. to $31.10. This is a building products firm. They lowered their earnings outlook for the year, citing a weaker environment for its roofing and composites businesses. The news also weighed on shares of Beacon Roofing Supply, BECN. We'll see shares of Beacon Roofing Supply coming right down to the 50-day moving average today, down $1.80, 6% to 28.11. So a lot of growth names out there. Boy, they're kind of sitting right at that 50-day moving average. There were people thinking that Apple would be able to hold the line. Mentioned that the NASDAQ composite possibility that that was going to hold the line, but it hasn't happened. 877-927-6648. Let's go to our first call to the day. Talk to Barb in beautiful Seattle, Washington. How are you today, Barb?
Just fine. Thank you very much. I'd like to know, I bought some cores at 53.66, and I want to buy some more. I wonder how low it would go.
Well, Michael Kors is one of my favorite names out there. I think this stock really has the potential to be a leader. It wasn't that long ago, while a lot of companies are lowering their earnings guidance, Kors actually came out and issued pretty bullish earnings guidance. That was within the past month. So I like the name a lot. I'm expecting, Barb, with Kors right now trading at $52 a share, its 50-day moving average is right around $50.75. So it's still holding above that support level. I'm not expecting a precipitous drop below that line. So I'll tell you what I would do, because I own Kors in my Ultimate Growth Stocks model portfolio. If it's clear to me that buyers come in and support the stock at the 50-day line, which I think is possible, that would be a good opportunity to add to your position. So if you've got, say, 200 shares of Kors and you want to add to it, maybe you add another 50 or 100 shares or something like that. You never want to buy the same amount as what you own. So if you own 500 shares of Kors, you're not going to add to the position by buying another 500. Maybe you add another 100 or 200 shares, something like that. So I'm going to add to my position if Kors finds support at the 50-day moving average at around $50.75.
Thank you very much.
Okay, Barb, thanks for the call. Appreciate it. Okay, headed into break number one. We'll check on the markets, go over a lot more stocks when we come back. You're listening to Breakout Investing on TFNN. Ken Shreve with you. We will be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Thanks to Barb again in Seattle. Wanted to talk about Michael Kors. And, Kors is, again, just to reiterate, one of these stocks that is not doing anything wrong yet. It is under a little bit of selling pressure today, down 2.5% to 52. But, as selling pressure builds in the market, some of these high-growth names like Michael Kors are the ones that are going to fall faster than the market. But Kors is holding above its 50-day moving average here. She wanted to know when a time to add to the stock would be, and I would say right now the 50-day moving average at 50.79 is support. If it breaks precipitously below support, this is a name that I would not be afraid actually to cut loose and perhaps revisit at a later date, because if it does break below the 52-week moving average, it tells me that the stock is probably ready to base and consolidate gains for a while. And, once it does that, it digests its recent gains and forms a new base and sets up for another breakout. That's the time I'd be interested in buying again. So hopefully this is just going to be a orderly pullback to the 50-day moving average. This market is going to right itself sooner rather than later. We'll get a nice bounce, and that would be an opportunity to pick up some additional shares. But whether or not it finds support there remains to be seen, so I don't want to buy too early. All right, we didn't talk about volume in the market today. There is, volume is tracking higher than what we saw Monday. Not surprising, since Monday was a holiday, Columbus Day. Right now, volume on the NASDAQ is tracking about 35% higher than what we saw Monday, which was very light at 1.1 billion shares. Even at 35% higher than Monday, we're still only looking at a 1.5 billion share day on the NASDAQ. So still relatively light volume in the market today. Yesterday, volume on the New York Stock Exchange was very light at 460 million shares. We're tracking about 20% higher than that today. So it looks like more mild distribution in the market today, but market leaders sure are looking vulnerable, and Apple's price performance certainly is disconcerting. But if NYSE volume holds where it is today, we would only be seeing about 550 million shares on the New York Stock Exchange today, which is on the light side as well. Before we went to break, talking about some downgrades today. Chip stocks weak. Intel gets a downgrade. Chipmaker Intersil warns on third quarter revenue. The news wasn't all bad, though. Let's take a look at Wolverine Worldwide. That is a mouthful. Look at this. After early strength, stock hits an intraday high of 45.16. It is now trading near its session low, up 35 cents to 43.44. Notice how it tries to, get back above that 50-day moving average and gets turned away. Looks like resistance to me for now. Wolverine Worldwide earlier today raised its earnings guidance. In May, the company paid $1.24 billion for brands owned by collective brands like Sperry Topsider, Saucony, Stride Rite, and Ked. So raised earnings guidance from Wolverine Worldwide didn't help the stock today, and that kind of tells you, the market is just not acting all that well here. Looks like resistance for now at Wolverine Worldwide's 50-day moving average. Let's take a look at LLY. LLY. Shares of Eli Lilly extending gains, has given back some of its gains today, but still up 1.8% to 51.71. Yesterday, the company hit, or I should say, the stock hit a 4-year high Monday after the company presented data showing its Alzheimer's drug candidate slowed memory loss. Good news there. Sort of a mea culpa from Goldman Sachs today. They lifted their rating on the stock to neutral from sell. So big gains for Eli Lilly yesterday on that positive Alzheimer's news. The stock extends gains today, but trading near its session low. Some other movers today. Let's take a look at Netflix. I think I heard Jim Cramer call this stock really a battleground here. You had an upgrade yesterday from Morgan Stanley to overweight, but today B of A Merrill Lynch downgraded the stock to underperform from buy. A lot of sellers in Netflix today. The stock is down $7.67, 10.4% to 65.85. This is a technically damaged stock where fundamentals are still very much in question here. So I know a lot of people like to trade this stock. It does not interest me in the least bit. Still, it's making news, and analysts have differing opinions about the future for Netflix. I guess that's what makes a market. 877-927-6648. Give me a call, folks. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Checking in on King Dollar, up as you might expect today, 43 ticks or so to 79.97. That's about a 0.5% gain for the greenback. Taking a look at Tiger TV, a chart of the U.S. dollar index. This is the dollar index as of Monday's close. You can see it still has some resistance to get over here at 80.15. So I don't know that the U.S. dollar index got over 80 bucks today, but still has some resistance to deal with at 80.15. Not to mention its 200-day moving average at 80.70 and its 50-day line at 80.98. So still not clear to me that the U.S. dollar is ready to start a meaningful uptrend here. If it does, obviously that's not going to be good news for stocks. Checking in on bond yields, the 10-year note right now about 1.72%, the 30-year bond at 2.94%. Kind of a wild day of trading for the Financial Select Sector Spider Fund, XLF. I thought I saw a blurb earlier today that the XLF, there may have been some bad trades that went through here, resulting in a wild intraday trading range that you can see here. Right now the XLF is at its session low at 1591. Down about 0.8%. According to the data, it hit an intraday high of 1649. So it briefly moved over a swing point of 1644, but an ugly reversal day for the XLF ahead of a couple of key earnings reports later this week in the financial sector on Friday, JP Morgan Chase and Wells Fargo. So not such a great day for the XLF. Couple of other upgrades to tell you about. Let's take a look at Shoe Carnival here, SCVL. Good day for the stock. It is nice gap up for Shoe Carnival, up $1.31, 5.8% to $23.96. Stock gets an upgrade to buy from neutral at Stern AG, and also ALLT, old networking name here, Allot Communications. After early strength, it is near its session low, but still up 1.3% to 25.16. Again, it briefly pokes above its 50-day moving average here, but gets turned away. Allot got an upgrade today to buy from hold at Jeffries. Again, Allot is based in Israel. Innovative company, excellent growth prospects. They are a maker of network optimization products. And file this one under the category of strange upgrade for the day, but Bank of America Merrill Lynch sees something in Radio Shack. Radio Shack, don't see more pronounced downtrends than this one, but Radio Shack having a good day today, up 12%, only 25 cents, but you have to remember it's a $2.33 stock, so big percentage gain for Radio Shack today. Not Morgan Stanley, excuse me. Bank of America Merrill Lynch thinks that evaluation, I'll get it out. Radio Shack thinks that Bank of America thinks that Radio Shack's valuation is palatable down here. All right, there you have Radio Shack. Never should have started talking about it in the first place. All right, Questcor Pharmaceuticals. This one's been in the news. Stock is higher today, but see, once again, early gains faded. It is up 49 cents, 2.4% to $20.78. Remember, last month, health insurer Aetna said it might stop reimbursing all uses of the company's Acthar gel, which is used to treat exacerbations caused by multiple sclerosis. Aetna said it may keep the drug for treatment of infantile spasms, but said there's not enough clinical evidence that Acthar is more effective than steroids in treating those conditions. So final decision is due in October. The company did get some positive comments from Jeffries after the company said paid prescriptions in September of its flagship drug Acthar rose 30% from a year ago. Jeffries upgraded the stock to buy from hold and set a $28 price target. So enthusiasm in Questcor was short-lived today. It is trading near its session low after early strength, and obviously a lot of technical damage done to this stock as well in recent days. Medical device makers under quite a bit of pressure today after Edwards Lifesciences issued a revenue warning. Let's take a look at Edwards Lifesciences. Stock is down close to 21% today to 85.28. Really didn't see much in the way of sell signals in this stock, holding above its 50-day moving average. Really not much in the way of institutional selling at all. Saw a little bit over here in September, but stock really never gave up much ground and firmed up at its 50-day moving average. But today it gaps down and is now trading below its 200-day moving average, again at 85.28. All this because of a revenue warning late Monday. The company forecasts third quarter sales of $448 million. That was well below the consensus estimate of $476.6 million. CEO Michael Musalem said the company expects, quote, a strong rebound in the fourth quarter, close quote, helped by pending FDA approval of the company's Sapien heart valve to treat high-risk patients. Seemingly positive comments from the CEO, but not helping Edwards Lifesciences today. So a lot of, as you might expect, medical device makers under pressure today. There's Intuitive Surgical, which makes the Da Vinci robotic surgical system. Stock has taken a big hit today, down 2.8%. $14.08 to $495.24. Let's take a look at Zimmer Holdings, which is ZMH. At last check, this stock was trying to hold its 50-day moving average, still trading above the key support level, but brutal day of trading for Zimmer, down 4.3% to 63.97. Its 50-day moving average is at 63.61. So another 36 cents, and Zimmer will be sitting right at its 50-day line. Like this stock a lot, though I don't know how to pronounce it. I normally will call the company to get a pronunciation if it's confusing, but they are based in Ireland, I believe. So it is ALKS. It's either Alkermes, but a good stock here. Under a lot of pressure today, down 2.7% to $20 a share. What I like about Alkermes is that this is a stock that before today was under quite a bit of accumulation, and that tells me that I think there's probably a good chance this stock is eventually going to firm up at its 50-day moving average at around 19. So if you missed the breakout over 20, and it basically is paying a visit to that swing point right now. But if selling in the broad market persists, this $19 price level here could be a support level. Volume is heavy in the stock today, but bottom line, this is a stock under accumulation, and it shows excellent top-line growth in recent quarters, triple-digit sales increases for the past 3 quarters. They make drugs for schizophrenia, depression, and a variety of other drugs in the pipeline as well. But interesting company here, and a strong stock that I would think would be able to find support at its 50-day moving average. Take a look at shares of Google. Google under quite a bit of pressure today. This one's been a big market winner in recent weeks. Shares of Google down $14 today, 1.9% to $743.82. Still holding above its 20-day moving average. That's how strong a stock Google has been. Its 50-day moving average is all the way down at 697. 697, so it still has a ways to go to get to that 50-day moving average. But doubt that it is going to get down that far. It would take a pretty big sell-off in the NASDAQ for that to happen. But so far, Google holding its 20-day moving average, which is right around $740 bucks a share. Google last traded at $743.82. Shares of Baidu, similar business to Google. Baidu is based in China. This stock's really taken a hit today, down 7% to 106.32. Sellers have been in control here for quite some time. Credit Suisse cut its rating to underperform from neutral. New price target of $83 a share from $118. Baidu has been under selling pressure since rival Qihu 360 Technology, QIHU, that company announced in late August that it would start using its own search engine. So ever since that news came out from Qihoo in China, Baidu has really been under quite a bit of selling pressure. Qihoo today, muted selling pressure, down 15 cents to 22.50. Another name holding above its 50-day moving average here. Growth prospects very bright at Qihoo. So this is a name worth watching. And then other sellers or other decliners today under quite a bit of selling pressure. Alexion, similar situation to Google here. Actually not, because Google's holding its 20-day moving average. Alexion plunged below its 20-day line today. It has its sights set on its 50-day moving average at 108.82. I've been saying for some time that this is not only is it a late stage base, but a stock that probably needs to consolidate gains, and it looks like that consolidation is finally starting after a big decline yesterday. Stock is down another 3.7% today to 111.03. So 50-day moving average at 108.82. We'll see if Alexion is going to be able to hold that 50-day moving average or not. Take a look at shares of MasterCard MA. Remember, MasterCard recently broke out. Nice heavy volume breakout over 461.79. It is coming back down to within buying range. But bottom line, folks, is that when you're in a market that is under distribution, it's not under massive distribution, but it's under enough distribution here to be very, very proactive about your holdings. You don't want to be, go out and be looking for new stocks to buy if you've got cash to put to work. You want to say, well, I missed MasterCard's breakout over 461. It's back to that buy point pretty much. I'm going to buy it here. I think this is a risky name to own in the current market environment. So but this has a lot to do with I pay a lot of attention to price and volume in the major averages to tell me when to be aggressively buying stocks and when to be raising cash. I am in protecting capital mode right now. I am again, I was about a little more than 60% in the market headed into today. Now I'm about 40%. I took some partial profits today. I cut losses short in a couple of other stocks. So just kind of preserving capital, recognizing that the market's a little bit vulnerable here, and I'm going to let the selling kind of run its course. And the fact that we're headed into third quarter earnings season, it's really hard to be optimistic that we're going to see good numbers. I mean, it just seems like we're just getting warning after warning after warning, and even the companies that are saying positive things, they can't get out of their own way either. So really have to kind of listen to the market, watch the market, and take your cues from the market. I think the risk clearly outweighs the reward here. Taking a look at crude oil for November delivery, it was up big today. A lot of that had to do with the news of additional stimulus out of China. Crude oil up $3.06 today, 3.4%. It settled at $92.39 a barrel. And then gold for December delivery fell $10.70, 0.6% to $17.65 an ounce. That's gold's lowest close in almost 2 weeks. Taking a look at the GLD, under a little bit of selling pressure today, not by much though, down $1.03, 0.6% to 171.02. Let's take a look at Continental Resources as well. This is a stock that was bucking the trend at one point, and still having a good day today, coming back to life. Stock is up 2.7% to 78.56. They had their investor conference today. Yesterday, the oil and gas company revealed a plan to double its production and reserves of oil and natural gas liquids in the next 5 years on leased properties in the U.S. CLR has a big presence in the oil-rich Bacon Shale area of North Dakota and Montana. So investors like what they hear from Continental Resources. CLR, stock up 2.7% today to 78.56. And back above its 200-day moving average. So its technical picture has improved, at least just just a little bit. Other names here holding above their 50-day moving averages, names to watch. Again, this is for growth stocks, which is what I target for my Ultimate Growth Stocks newsletter and market portfolio. It's a very risky environment for names like this. But a name like Ulta Beauty, under selling pressure today, down 2.6%. to 95.64, still holding above its 50-day moving average, as you can see. Again, a high enough quality name where I wouldn't be surprised to see it find support at the 50-day line. But I'm hearing some other people tell me that Ulta is a late-stage base. I kind of go back and forth. I think I'm not convinced of that. But Ulta, we'll see if it can hold its 50-day line or not. All right, folks, headed into the final break. We'll do one last check on the markets, talk about earnings from Alcoa and Yum Brands after the close. We'll do that in about 4 minutes. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone. Before we went into the last break, talking about some growth names out there that have not broken down yet, still holding above the 50-day moving average, which is normally a key support level for a lot of high-quality names. So Alta Beauty still holding above its line. How about Tractor Supply? Just a couple days ago, we saw a nice, powerful breakout. It wasn't so powerful, though, as it is now back below the buy point. Not surprising to see in a market that is under distribution, but Tractor Supply still holding above its 50-day moving average, you can see. How about Salesforce.com, another stock that was setting up for a potential move higher? Still not out of the question, but again, we're in a market that's under some distribution here. Very challenging environment for growth stocks to make headway. Salesforce down 1.2% today to 151.75. Still holding above its 50-day moving average as well, right around 147. And LinkedIn. This is another failed breakout after a recent breakout over 113. LinkedIn is pretty much trading right at that swing point, 112.90, the last price for LinkedIn, trying like heck to hold on to its 50-day moving average, which is around $112 a share. So market extremely vulnerable here. Apple definitely cause for concern here when you have a big market leader like this breaking below support. That is potentially problematic, but then again, the market has rallied quite a bit since late July. We're seeing a little bit of a consolidation here as investors fear that third quarter earnings season may not be up to snuff. Speaking of that, we'll take a look at Alcoa ahead of its earnings report after the close. The aluminum giant right now is up 6 cents, actually working on 4 straight gains here, up 6 cents to $9.18. You see its 200-day moving average here at 924. Looks like resistance for now. I just have a hard time believing that we're going to hear anything bullish from Alcoa after the close. You've got some stimulus going on in China. The country is a big consumer of aluminum. They make up about 40% of worldwide demand, but with economic growth slowing there, I just don't see Alcoa really saying a lot positive about demand going forward. Now, Yum Brands. Yum Brands has a presence in China. Pretty wild day of trading in Yum Brands ahead of its earnings report after the close. They're expected to earn 97 cents a share, up 17% from a year ago. Sales up 11% to $3.6 billion after hitting an intraday high of 68.29. I'm not sure if that's a bad tick or not because it's a very wide intraday spread here for Yum. Stock was recently trading at 66.03, down 1.4%. So obviously some concerns about Yum earnings as well. Tomorrow we'll get a look at earnings from Costco, C-O-S-T, high-quality retailer, also holding above its 50-day moving average here. Looking vulnerable, though, down near its session low, down $1.72, 1.7% to 99.63. So we'll see what Costco has to say tomorrow. Earnings expected to come in at $1.31, up 21% from a year ago, with sales up 13% to $31.7 billion. It's going to be interesting to see if Workday is going to have its IPO this week. There's a lot of excitement about Workday's IPO. David Duffield is the co-CEO at Workday. Duffield is what was the co-founder and former chairman of PeopleSoft. So Workday is a provider of human capital management software as a service via the internet, another cloud name. They're expected to price between 21 and 24, but with tech stocks looking as vulnerable as they are, wouldn't be surprised to see this one shelved. We shall see. Coming up next, the Tom O'Brien Show, 4 to 6 Eastern. I'll see you back here tomorrow, same time, 3 o'clock Eastern, for another edition of Breakout Investing. Have a great afternoon, everyone.